Coming up on Business Incorporated. CBN governor confirms over 4 billion naira worth of transactions carried out on the E-Naira platform. Central Bank of Egypt keeps interest rates unchanged to ensure price stability over medium term. And the US dollar is on the rise again and shaping up for its best week since March. Hello and welcome to the program. I'm Ladi Williams. First off, let's take a look at how the markets are looking. Starting in the Middle East, let's see what's happening in the UAE. We see Abu Dhabi there. It's up about 0.10% at 10,106 points, while Dubai index 3,430 points, marginally down by 0.06%. Let's move over to other parts in the Middle East. We see Qatar there closed yesterday in the green, up 0.21% at 14,018 points. And we see the Saudi index, 12,621 points. That closed down negative about 0.20%. Let's move on to Africa now. Let's see what's happening in the Africa with the trading in Africa. There we see the NGX there. Bearish trend continues with the NGX is down about 0.30%. And on the flip side, we see the GSC there. That's up about 0.69%. And we see it's a bigger close in the green for the Egypt EGX 30. It's up 0.36%. And we see Kenya there closed negative yesterday. Again, we see that negative trend continuing right there in the Kenya bourse there. Let's move on now to Europe. Let's see what's happening in Europe. Mid rising prices and growing concern over energy security. Growing number of Germans are cutting back on their spending for everyday needs, according to a recent poll. Here's DW correspondent now, Chris Koba, with the details. Great to have you, Chris. So what exactly does the poll tell us?
It says that 7 out of 10 Germans are using less energy nowadays. That is due to decades-high inflation in the country. And it is a growing part of society which is doing it, because this figure of 70% is up from 63% in April this year. In the poll, around 1,200 people were surveyed, and around half of them also say that they are spending less on leisure activities. So we see that the economic ramifications of this war in Ukraine have really worked their way into the minds and the lives of the German public. Annual inflation accelerated to 8.5% in July from 7.8% in April, driven by a 35% rise in energy costs. Now, lower income households are changing their habits most, according to the survey, with 2/3 reducing their daily shopping and spending on leisure activities and holidays, compared with half of households with an average income. Quite interestingly, though, there is no difference between lower and average income households when it comes to reducing the use of energy.
And Chris, with the current crisis now, we see Germany has created a relief package of more than $30 billion. Can the country afford this one?
Yes, it can. According to the country's finance minister, Christian Lindner, and the head of the business-friendly Liberals, also says that such a relief package worth billions of euros can be brought underway without compromising the so-called debt brake, which limits the country's public deficit to 0.35% of GDP. Now, Germany has repeatedly vowed to reinstate the debt brake, a cherished rule enshrined in the constitution in 2023, after it was suspended for 3 years due to the coronavirus pandemic. The return to fiscal discipline was a key demand of Christian Lindner's Liberals in coalition talks last year with the Greens and the Social Democrats. However, With the country's deepening economic woes, some members of the Greens and the Social Democrats have called for the rule to be suspended for longer. Asked in an interview how big the new package could be while still adhering to the debt brake, Mr. Lindner said that he thought a figure in the low double-digit billions would be achievable. The relief package would comprise measures aimed at both low and middle-income households, as well as targeted economic aid for energy-intensive companies, as the finance minister put it. The government had already earlier this year unveiled a €30 billion package to help consumers beat inflation, including a fuel tax cut and a cheap public transport ticket for the months of June, July, and August. And Chancellor Olaf Scholz of the Social Democrats had last week promised more measures to help offset soaring food and energy costs.
Right, we'll be looking tracking how far that goes, but how are the markets looking?
There's not much left of the optimism, however irrational it may have been, that seemed to have been fueling share prices over the week. European shares fell on Friday and were set for a weekly loss on fears that a tighter monetary policy, inflationary pressure, and an energy crisis could push the global economy into a recession. Germany's DAX index is retreating 0.4% in the early parts of trading, which is in part due to troubling news coming out of Europe's biggest economy. Producer prices, regarded as a leading indicator for inflation, saw their highest jump on record, both on the month and on the year in July, driven primarily by high energy prices. That's according to fresh data from the Federal Statistics Office. Energy prices as a whole were up 105% compared with July 2021, due mainly to higher prices for natural gas and electricity. And with the Finance Ministry in its monthly report saying the outlook for further economic development is currently noticeably gloomy, as well as marked by a high degree of uncertainty, the mood on financial markets has also turned noticeably sour.
All right, that's Chris Koba right there in Berlin. Thank you so much, Chris. Always good to have your perspective. Let's move on now to other markets. Asia Pacific markets were mostly flat today against an also muted Wall Street, looking to revive its recent market rally. Was largely negative. China markets, the Shanghai Composite fell about 0.59% to 3,258 points, while the Shenzhen Component dipped by 1.27% at 12,358 points. The Hang Seng Index closed flat. There was positive action from Tencent, up 0.77%. But food delivery giant Meituan was down more than 0.7% this week. Tencent denied offloading its stake in Meituan. While moving on to other markets, Japan's Nikkei 225 also finished flat at 28,930 points, while the Topix Index added 0.2% to 9,004 points. Japan's July headline inflation has risen to 2.6%. From 2.4% in June. That was the above expectations, about 2.2%, and higher than the Bank of Japan's goal, about 2.0%. The S&P ASX 200 in Australia also ended flat at 7,114 points. India's central bank is due to release minutes of its last monetary policy statement later today. And now stock futures were lower today, dimming hopes that the S&P could grind out another positive week. Futures for the S&P 500 fell about 0.93%, while those tied to the Dow Jones Industrial Average dipped about 260 points there to 0.83%, with the Nasdaq there 13,395 points. The futures showing it's down about 0.95%. This week has been relatively muted for the markets. We've seen the dollar actually ranging at this point. For the week, the S&P 500 entered today's session up by 0.08%. The Dow was up 0.7%. At that time, the tech-heavy Nasdaq came into today riding a 0.6% weekly loss. The S&P 500 has posted a gain in each of the last 4 weeks, while this week has seen relatively muted moves on Wall Street. It comes on the heels of solid rally since mid-June. And oil prices slipped today after 2 days of gains and heading for a weekly loss as a strong dollar and worries about a global economic slowdown weigh on the market. Brent crude futures were down $2.03 at $94.56 a barrel. U.S. West Texas Intermediate crude was at $88.66 a barrel, down about 1.84 cents. Both benchmark contracts were headed for their weekly losses of more than 3%. A strong dollar has made oil more expensive for holders of other currencies, while Asian and European equities dropped. In a sign of easing oil supply tightness, the price gap between prompt and second-month Brent futures narrowed about $5 a barrel from the end of July. Supplies could tighten again this when European buyers start seeking alternative supplies to replace Russian oil ahead of the European Union's sanctions, which take effect from December 5th. And to the metals market now, gold slipped to a 3-week low today en route for its first weekly drop in a month, pressured by a stronger dollar and rising U.S. bond yields. Spot gold fell for a fifth straight session, down 0.3% at $1,753 per ounce of that's an early trade, which could be its longest losing streak since November 2021. U.S. gold futures slipped 0.2% to $1,767 per ounce, tracked by the dollar's renewed ascent and a steady rise in the benchmark U.S. 10-year Treasury yields. Prices of zero yield greenback price gold are down about 2.7% this week. The market has been complacent in expecting the Fed to slow interest rate hikes and that they would begin easing in the first half of 2023. And the Minister for Industry, Trade and Investment, Tumba Adebayo's estimated cumulative investment in the 30 years of operations in the free trade zone scheme in Nigeria, $20 billion. Responding to this, the Chief Executive Officer of Brickstone Africa sees this as a Herculean task because of the level of effectiveness recorded at most of these zones at this time. Do take a listen.
There's no ports. So there are only about 3 or 4 free trade zones in the country today out of these 15 or 50 you mentioned, right, that have port facilities. And if you're going to deal with trade, the first business case for a free trade zone is what is the mobility? How do people move the inbound and outbound logistics out of that zone? So if you have a free trade zone in an inland area that is landlocked, that doesn't have water, or that doesn't have a real serious access in terms of maybe air transportation, maybe it might be close to an airport and things, you are going to lack tenants. You are going to lack the viability you determine to achieve. Secondly is the fact that there are other free trade zones that are based on raw materials. So, for example, because you have gas, you have a number of free trade zones in the southeast, on the south-south, because of the gas nature in itself. But at the end of the day, you will also find out that the raw material is just in situ. The raw material is not available via a pipeline. So government should have looked at, okay, we're going to have a free trade zone here for energy producers, for people to produce fabrication, and they need gas. They're going to produce power and a number of other things. So when you go to some free trade zones you have in Nigeria, you have a lot of foreigners there. But you're like, why are we having free trade zones and we have a lot of foreigners in situ in the free trade zone when we should have, the locals actually being built with capacity, being able to work on it in itself. So
looking at sustainable development now, the future of private sector depends on the practicality of the sustainable development by corporates. And Professor Kenneth Amechi, Chair of Sustainable Finance and Governance at the European University Institute, who was on our Business Morning show, believes that there's a need for more regulation. Do take a listen.
But in order to be there in the long term, you need to adjust, you need to adapt to the current reality, and also to align yourself with the global trend or the future trend. So in that regard, so what you want to do is also make sure that you are taking into consideration your risk. I'll give you an example, if you have the time. Think of your, say you're a bank and you have like 700 branches across Nigeria. A typical bank in Nigeria might be spending about 1 million naira on diesel, as we speak, or even much more, given that the price of diesel has gone up. So imagine that you have about 600 branches across Nigeria and you spend 1 million naira on diesel every month. So basically you're spending 600 million naira on a monthly basis. And if you project it over a 12-month period, you're spending 7.2 billion just buying diesel, pouring it into your generator and burning it. So over a 10-year period, you're looking at 72 billion naira. If you're an investor, you'll be worried about that company, for example, but it also provides an opportunity for a company to save money through alternative sources of energy. So sustainability thinking in that regard helps you to rethink what we may see as a conventional everyday practice.
All right, we're going to break now. When we come back, more stories on the African continent. Do stay with us. This is Business Incorporated. Welcome back now to our next conversation. A new wave of startups, entrepreneurs and developers are driving the next stage of Web3 innovation in Africa and across the globe. A new Web3 economy is giving rise to a myriad of opportunities with huge implications for the African continent. Join us now is Akash Agrawa, growth strategist, Web3 consultant and CEO and founder MetaWorks. Join us right there from Delhi. Great to have you on the program.
Thank you so much, Larry. It's nice to be here. Thank you so much.
Yeah, so first of all, tell us what is Web3 and why is it getting so much attention?
All right, great question, Larry. So actually, you know what, to understand Web3, so Web3 is the next iteration of the internet. So to really understand it, maybe we need to step back a little and look at, you know, what Web 1 was or what Web 2 was. So Web 1 was basically early 1990s. It was just text. All you could do is go onto the internet and read some text and come back. It was in the early 2000s. That was when actually the current web, the current internet that started to come into existence. And what really happened at that point in time was the biggest change that happened was that users were able to upload content. So we went from a read-only kind of an internet. We went into read and write. And when that actually happened, we had a whole lot of other platforms come into existence. And they served a great purpose from an aggregation perspective and also from trust perspective. So when you talk of aggregation, it could be service aggregation, e-commerce, and all of that. And then also from a trust perspective, when you need to transact between two parties, they served a great purpose in terms of ensuring that the transactions actually happen, because you cannot trust some unknown folks on the other side of the world, transacting through the internet. But on the flip side, also what these platforms did was they extracted huge amount of rent. So the take rates typically could be in the range of 20 to 30%, whereas actually the people or the folks who were creating all of that content were not getting their dues. And so what now Web3 does is, so Web3 number one is like a catch-all phrase for everything blockchain, cryptocurrency, and NFTs. And what it actually does is that basically it removes the need for having centralized platforms. So basically, you can think of it as a network of computers, which runs on code and smart contracts, and which totally decentralizes everything. So any transaction that you would want to execute executes autonomously, depending upon whatever are the terms which are fed into that particular contract. It is permissionless. So I do not need any permission to get onto the internet. I do not have to go through any validations, verifications, credit rating scores, or all of that. So that becomes totally permissionless.
Right.
It is also trustless. So in the sense that I can transact with you tomorrow, I do not know you, and I have to buy some art from you. I can actually transact with you without knowing who you are, because the technology and the backend will ensure that you actually own that digital token or that digital asset. And I, on the other hand, actually own the actual cryptocurrency or the digital money, whatever is required to actually get into that transaction, and it will auto execute. So It eliminates the need for any platform. So that is the brilliant thing. So what it does is basically it gives ownership back to the creators. So that is why it is so important today. And because it is decentralized, it is also censorship resistant to a large extent. So nobody can come in and actually take ownership of my asset. It stays with me.
Very interesting, Akash. But what do you think are the prospects for adoption in Africa?
All right. So I think that Africa presents a brilliant case for a huge growth from here on. Actually, if you look at Africa as a continent, it has been to some extent excluded from the global transformation that we have seen. But if you look at it structurally from a political, economic, and a financial perspective, from what I have read is that about 50% of the adult population today is unbanked. About 60 to 70% of the economy is actually coming in from the informal segment. And this is where actually once you are able to, if those internal structures and those processes actually are not robust enough, then they become a barrier actually to the economic growth. And this is where actually Web3 steps in and creates those structures, including the native currency also of many of those blockchains. So it actually provides a complete infrastructure solution for people to actually, get onto the economy and then build on from there.
Okay.
So this is really what it does. And also, I'll step back and say that, okay, I think Africa was one of the first ones to adopt mobile money. So M-Pesa, I think, came into existence in 2007 when most of the people were not even, or most of the countries were not even on digital tokens. So which also tells us that, people are already open. They have seen value in digital tokens or digital currencies. And this is the time to actually take it to the next level.
All right, Akash, thank you so much. We're watching to see how much adoption actually grows for Web3. Quite an interesting term there. Akash Grauer, founder, MetaWorks. It's great having your perspective.
Thank you so much, Ladi. It was a pleasure talking to you. And congratulations. I just saw about 4 billion transactions on the CBDC. So that's
exactly.
Really
that's
the proof, right?
exactly. Thank you so much.
Brilliant. Thank you so much. Nice to be here.
All right, talking about the E-Naira. Well, transactions worth over 4 billion naira have been conducted through the E-Naira channel, initiated 9 months ago by the Central Bank of Nigeria. And that's according to the CBN governor, Mr. Godwin Emefiele. Speaking at the grand finale of the E-Naira Hackathon Challenge in Abuja, the governor of the central bank announced plans by the financial market regulator to reach both the banked and unbanked Nigerians who have the apps on their mobile phones. And the Central Bank of Egypt has kept its benchmark rates unchanged. Accordingly, the Central Bank of Egypt overnight deposit rate, overnight lending rate, and the rate of the main operation remain unchanged at 11.25%, 12.25%, and 11.75% respectively. The discount rate was also kept unchanged at 11.75%. Earlier, President Abdel Fattah el-Sisi issued a presidential decree appointing the chairman of the board of members of United Media Services, Hassan Abdullahi, as the acting governor of the Central Bank of Egypt after the previous governor resigned for reasons best known to him. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Enjoy the weekend.